Yes, it is Ini. Yes, you're correct. Mark, I fear not. And Kayla, yes, it's Ini on this other side of business. And I wish you ladies happy Valentine. And I know that you have plans afterwards. Just take it easy, and be back at work on Monday. Well, good morning, everyone. Welcome to Business Morning on Sunrise Daily, where we do just about 30 minutes of business before we head back to the Sunrise Daily studio. We're starting from the global space as usual. Valentine hasn't disturbed oil prices. This morning, we see it just going up there in early trade. It's set to snap a 3-week losing streak amid rising fuel demand and expectations that Trump's plan for reciprocal global tariffs would not come into effect until April, and that's giving more time to avoid that a trade war. Look at the numbers for this morning. 19 cents this morning is more than, in fact, almost 2%. It's 1.90%. $75.25 a barrel, while WTI has 1.2%, and that's $71.41 a barrel. Global oil demand surged to 103.4 million barrels a day, and that's 1.4 million barrels increase year on year. U.S. President Donald Trump ordered commerce and economics officials to study reciprocal tariffs against countries that place tariff on U.S. goods and to return their recommendations by April 1. However, a potential peace deal between Russia and Ukraine has kept traders concerned that an end of sanctions on Moscow could boost global energy supplies. And of course, that will bring down price. Also this week, President Trump ordered U.S. officials to begin talks on ending the war in Ukraine after Russian President Vladimir Putin and Ukrainian President Volodymyr Zelensky expressed desire for peace in separate phone calls with him. Russian oil exports could be sustained if walkarounds to the latest U.S. sanctions package are found after Russian crude production rose slightly last month. The International Energy Agency shared this in their latest oil market report. And looking at the Naira, but first I think we do have to set our DSTV viewers over to Adamawa State, where it's, I think, the 5th day we've been seeing the swearing in of some traditional leaders right there. So it continues today in Adamawa, but that's for our DSTV viewers and not for the others. For others, we're still here. Business Morning on Sunrise Daily continues. And if you're on YouTube, you can switch to the next switch. And all right, so now continue with Business Morning. Look at how the Naira fared yesterday. Yesterday was active in the market, but at the end of the trading session, we saw on NAFEM it was unchanged. They opened at 1,504 Naira, 30 Kobo closed the same. And then NAFEX, we see that there was just a slight change. CBN also, it was unchanged. Could we say the market was stable? But I guess you can't judge with just one trading session. So even though we see a lot of unchanged, just slight movement at the close of Thursday's trade, we cannot say this is for stability. Well, no, there was also OMO yesterday. Open market operations auction was on by the Central Bank of Nigeria. So the market was really active, but at the end of the day, we did see this close for the various platforms. And talking about the CBN, the Central Bank of Nigeria has given more explanations on the new 100 Naira charge on ATM withdrawals, known as Not On Us transactions. According to the Apex Bank, the charge on transactions on other bank ATMs is necessary to ensure constant supply of cash. The CBN's Acting Director of Financial Policy and Regulation, Mr. John Onoja, who was a guest on Business Incorporated explains that the charge applies regardless of the amounts withdrawn, warns that any bank restricting withdrawals below 20,000 naira against the customer's wish will be penalized.
Now, we are going to ensure now that the customer has cash anytime he goes to the ATM. And one other thing that you're going to see now, you must have seen an amount of 20,000 being mentioned several times within that short circular. And what that means is that the experiences that we have when we get to the ATM, and then you are told you cannot withdraw more than 5,000, especially when it is not on us, or 10,000 as the case may be, is going to stop.
Government has announced an 18% fare increase for bus rapid transit, that's BRT system, and other regulated public buses under the Bus Reform Initiative. That's effective from Monday, 17th of February. The Lagos Metropolitan Area Transport Authority, Lamata, disclosed this in a post and says, according to Lamata, the fare adjustment is driven by rising operational costs faced by bus operators, and that is expected to commence on Monday. A bit of corporate now. Odua Investment Company says it is focused on creating more jobs for young people in the country through its diversification and expansion plans. The chairman of Odua Group, Mr. Bimbo Ashiru, made this known at the group's annual meeting in Lagos. According to him, key areas of focus for the group include industrialized agriculture as well as expansion in the hospitality sector.
What we have done in Premier, we are going to do the same thing in this building. Ikeja Airport Hotel, we are bringing investors. This is over 65,000 square meters that we are going to bring in. We are going to have a mixed use here where we have the 5-star hotel, we have the shopping mall, we have Airbnb where people can stay, short let and everything. So those are the areas we are focusing on. And rest assured that in the next few years, you see what we are doing. Even the marginal field, by God's grace, very soon, by the second or third quarter of this year, Odua will be an oil-producing company.
Well, getting more oil-producing companies in the country, I believe, will boost supply and help price one way or the other. Now, it's Valentine's Day, and well, I know perhaps you already have your plans and all of that. We have a conversation waiting for you for business during Business Incorporated. But for this morning, just to give you an idea, just in case you're preparing to make plans, let's see what prices are like. So going through some available packages for today, for the weekend, we did notice that there are packages that range from, for instance, English breakfast could cost you about 60,000 naira. Main meal could do about 100,000 naira. Weekend combo, because I know being a Friday, it would spill over to the weekend. You can do about 50,000. That's like, you know, something really light. A bottle of wine, that's a package. A bottle of wine, cake, meal, live band, you can have about 150,000 naira. And then looking at the hotel packages, well, there's some packages for couples, and what we see, at least for the 5-star, basically, will go from 175,000 or from 150. And of course, when you look down memory lane, you would see that this price is about 20-30% more than what it was this time last year. So I guess it's good to work for money and also make money work for you while you relax, and we wish you a happy Valentine. Now, to some other serious business, President Bola Tinubu had on February 5 raised the proposed 2025 budget from 49.7 trillion to 54.2 trillion, citing additional revenues generated by key government agencies. According to President Tinubu, the increase was driven by a 1.4 trillion naira additional revenue from the Federal Land Revenue Service, 1.2 trillion from the Nigeria Customs Service, and 1.8 trillion by other government-owned agencies. And yesterday we did see this budget go through the House, awaiting the president's assent now. One other high point of the budget is that Nigeria is estimated to spend 15.81 trillion naira on debt servicing. That's about 45% of the country's revenue, and it's of course higher than what we had in 2024. Now, these are the other high points of it. Statutory transfers, we see 3.645 trillion debt servicing there, recurrent expenditure, capital expenditure, and these are the major part. Of course, we have the targets for the year. Price of oil, for instance, has been put at $75. The value of the naira has been placed about 150 to $1 and all of that. Let's find out from the founder and chief consultant of B. Adedipe Associates Limited, that's Dr. Biodun Adedipe, now to share his thoughts on this. That's the budget that is awaiting the president's assent. Dr. Adedipe, good morning and welcome to the program.
A very good morning to you, Ini, and thank you for having me here.
Great. So I think first of all, we should start from, we know that the 2024 budget lifespan has been extended. Now we have this budget. I believe we still have a supplementary budget. And how many budgets do we have running at this time? And what's the implication of having multiple budgets running at the same time?
Well, I will put it this way, that yes, we started with an original budget for 2024 at over 27 trillion. And then there was supplementary that was added to that, took it to 34 trillion. Okay. Now, where we are today is that because the budget for 2025 is yet to be signed into law by Mr. President, Nigeria will still be running with the budget for 2024. But once the president assents to the bill and it becomes Appropriation Act, then that brings an end to 2024 budget. For me, in interpretation, there is really no overlap because the law still subsists, and that is the Appropriation Act for 2024 with the supplementary budget, that still subsists until Mr. President signs budget 2025. So really for me, it's still one budget in principle, actually, that we're running with.
Okay, so we see the budget now, 54.99. We know that the Customs Service has been really active. I believe they're even launching a program today. They were on Business Morning 2 days ago to tell us about the program. We see the tax reform also bringing up some promises. I believe that's one of the reasons why the FIRS has increased its expectations for the year. So, but in spite of this, we still have a high debt. I mean, at over 13 trillion naira. But would you say this budget looks real, workable, so that at the end of the year, we can actually say we've implemented at least 90% of the budget?
Thank you so very much for this question. Now, typically, when we interrogate the budget, we start from the focus of that budget. Does it speak to the existing challenges and problems in the economy and the society in general? That's the first question. Now, once we are clear about the theme of that budget and its nexus with the challenges in the economic and business environment generally, then we'll move on now to look at the assumptions. Now, 4 major assumptions in this budget, and you just mentioned them anyway. And that is crude oil price assumption, then the production figure 2.06 million barrels per day, and then of course we come down to the exchange rate, and then thereafter we now look at the issue of how this plays out in terms of GDP growth rate. Now, if we take all of this into account, the first question is how realistic are these assumptions? If you take the price of crude oil, like you mentioned, a couple of minutes ago, even though like you also warned us that what we see on the spot today doesn't speak for the entire year. So people must also understand that the assumption in terms of the crude oil price in the budget is an average for the entire year, not for one day, not for 1 month or a quarter, even half year. So it's for the entire year. So now what will inform that? So in interrogating that, the question I normally will ask is, what is the outlook for crude oil price in 2025? And that will take me to what is the expectation in terms of the demand for crude oil. For this year, there's an estimated 105.2 million barrels per day demand for crude oil. So now, question again is, which countries are the drivers of this? And there are 4 of them in terms of grouping. Number 1 is China, followed by India, then Brazil. They will lump together Middle East and, of course, the other Far East. Now, what is going to happen to these economies that drive the demand for crude oil in 2025? Number 1, the Chinese economy is expected to grow by 4.7%, the same rate it grew in 2024. So which means there is still going to be some measure of demand from China. Secondly, India. Yes, the economy was growing strongly up on the 2023, dampened a little in 2024. They will expect this year that the India economy will also grow strongly. So that will also be a part of the push for the demand for hydrocarbons. Then we take the Middle East, or let me say we take Brazil, okay? Brazil is number 3 on the line. Brazilian economy also, though slowed down a little bit last year, 2024, is expected to regain its strength in 2025. So these 3 major drivers of what happens in the crude oil market, especially China, are going to give some impetus to the demand for hydrocarbons this year. They will now take the Middle East and, of course, the rest of, Far East. When you take these 4 blocks, there is therefore an indication that the demand for crude oil will still be high. Then take the other side to it, the supply. There's a threat from the US in terms of what President Trump said recently, drill, baby, drill, which means US should produce as much of crude oil as it has capacity for. As of 2 weeks ago, US was producing 13.46 million barrels a day. Even if that is up by 50%, assuming they follow what President Trump said, and that is even almost impossible. You can't ramp up production at that pace that rapidly. But even if that happens, what will that do? Maybe take production in the US, 1 million barrels per day. That leaves a market of 83.94 million barrels per day for OPEC members. So if you play all of this data against each other for the year, clearly the assumption of $75 per barrel for this year, the budget appears realistic. Then we come to production, 2.36 million barrels per day. Again, we look at the trajectory of oil production in Nigeria, and we back up to April 2023, up on today. It's been increasing gradually, which means at some point, as we continue to produce more, and remember, condensate at about 200,000 barrels per day is not part of the OPEC allocation. That gives us some measure of room. So as we up production, then what has been pledged for external borrowings by the previous administration, now if we produce more, we can move beyond that rate and have some wiggle space to export and earn foreign earnings from export of crude oil. Add that to that condensate so that we expand what we earn from crude oil, or let me say generally hydrocarbons, which is crude oil, condensate, associated gas. Now, given that, that gives us a measure of some, confidence. But we now come to non-oil revenue, as you mentioned earlier on, which in fact is why the president did a letter to increase the budget from the 47.96 trillion naira we had before to now 54.2, that the National Assembly moved to 54.99 trillion naira. Question is this: do we really need that much figure? Yes, we do. Because if you look at what many budget analysts in Nigeria do, we are very happy to convert our budget figure into dollars. And then after that, we begin to compare with other countries and make reference to Egypt, Kenya, even Kenya, South Africa, all of them, that their budgets are far, far bigger. So for me, therefore, I don't have any worry about increasing it to 54.99 trillion naira. But what is more interesting to me, and that connects to a part of the question as well, and that is the allocation for capital expenditure. As much as we say yes, in the capital expenditure proposals, there are also, the provision for vehicles, furniture, and whatever. But the reality is that 2 major things. One is allocation to projects is increased. Then secondly, from what the Minister of Planning said yesterday, and I picked this out, very important for Nigeria, he talked about increasing the capital injection to Bank of Agriculture and Bank of Industry. To me, that is quite significant. maybe now to also say, we want to see what that budget says about the real estate sector. Are we looking beyond what Murphy is doing currently, all right, in that increase? If that is true, I haven't seen the detailed numbers yet. If that is true about this 54.99 that we're looking at currently, I will say Nigeria is the right direction with this budget. So it will now remain the last part of the question, execution. And that means we must deliberately set a target of execution very high and then begin to measure the deliverables by our heads of FDA, that is ministries, departments, and agencies of government. If we hold them accountable for the deliverables that these numbers speak to, rather than talking about the numbers only, then Nigeria will be on the path of executing our budget, more effectively than historically.
For that, very elaborate, going to the different parts there, and I hope we'll be able to come back to the issue of implementation. But I just want to bring up some factors that may or may not affect even, the workability of the budget. For instance, we are awaiting rebased GDP and CPI. Do you see that playing any role in the numbers that we have now from the budget?
My view, I think it is somewhere embedded in this figure, and I will tell you why. If you look at deficit GDP ratio in the budget originally presented to the National Assembly by Mr. President, that was over 3%. Okay? But when you look at the one now approved by the National Assembly, it came with a deficit to GDP ratio of 1.52%. So what I did simply was work that back against the budget of 54.99 trillion naira, and that will throw up an implied GDP that is much higher than what we are looking at now. So in my view, I think already the National Assembly has built in possibly the estimate of a rebased GDP of Nigeria that they got from MBS. That is my own thinking in interpreting the numbers. Because if you look at the implied GDP, it's a multiples of where we are currently. So in my view, therefore, I believe they factor this in interpreting these numbers.
All right. Then we hear Russia and Ukraine, they have, we do hope they are starting peace talks. Now, when we cast our mind back to about 3 years ago when the war in Ukraine started, we know what it did to the world, to oil, because Russia is a major supplier of oil, to logistics, which went down to inflation and affected global inflation. Do you expect that? Hopefully, the peace talks will start and there will be peace. Do you expect that to change anything?
Right, a very important issue you raised here. But the way I've interpreted that, because I also looked at that, and what I told myself in looking at the numbers and developments around the world is that Russia did not completely drop out of the oil market. Russia was still producing and supplying to the market. But of course, Europe was close to Russia. So what was close to Russia in Europe, of course, was open to Russia in the rest of the world. Russia was still selling, no doubt. They're probably not maximizing its capacity to produce and supply to the global market. But don't forget also that whenever we talk about OPEC plus, the plus there is mainly Russia. So for me, the critical factor to look at here is not so much as Russia coming fully into the global crude oil market, but what will happen to OPEC plus? If OPEC plus remains cohesive, Russia coming to that market will not bring any disruption to the global oil market. It will only mean that, yes, Russia is now fully, in the market. It will now be left to Europe whether they want to address the crisis they have also in energy by beginning to take crude and gas from Russia again. That is up to the Europeans. But looking at the global oil market, Russia being a member of OPEC plus, the critical element then is the cohesiveness of OPEC plus. So
but Dr. Adedikpe, yes. but that would mean, for instance, there are some countries that are enjoying cheap Russian oil now.
Correct.
And if those sanctions are taken off and Russia fully participates in the market, wouldn't that reduce the price of oil, therefore affecting our price target of oil for the year?
I don't see so, and I tell you why. Now, the portion of crude oil that Russia could produce and supply to the market is not as significant as what Russia was producing and supply. Yes, correct, at a lower price because it was selling at a discount. So if Russia crude oil comes back, number one is that Russia wouldn't need to sell at a discount. It will probably now sell at the OPEC benchmark prices for different crude types. So to that extent, therefore, I don't see any major dampening in the price of crude oil. If you look back again at what I had said earlier on, what actually drives the market are two elements: the demand for crude oil, and then what happens to the Chinese economy on a daily basis. Because I track that market on a daily basis. If you look at what is happening on a daily basis in the crude oil market internationally, it is any news about China that moves the needle of price. Anytime the Chinese government addresses a stimulus, like it happened a few weeks ago, the price starts going up. So it's not even so much as the demand, but what is happening to the Chinese economy. If you put out an outlook on Chinese economy, for example, today, that says China's economy will not grow at 4.7% again this year, it will grow slower. You will see the effect immediately on the price of crude oil.
All right, Dr. Adikpe.
So that is why I have that interpretation.
Okay, all right, Dr. Adikpe, thank you so much. We'll have to postpone that implementation part. Perhaps when the president gives his assent to the budget, we could have that. Thank you so much, founder of BRT, consultant, founder and chief consultant of BRT Associates, Dr. Abiodun Adedipe. Thank you for your time.
It's always a pleasure conversing with you. Thank you so very much for having me.
Yes, sir. All right, so the Nigerian Consumer Credit Corporation, that's Credit Corp, they began the distribution of tricycles and motorcycles to participate in the federal government's consumer credit scheme aimed at promoting the purchase of locally assembled vehicles. During the flag off in Lagos, some of the first set of beneficiaries received their vehicles, marking the commencement of the distribution. In collaboration with financial institutions and automobile manufacturers, the program seeks to improve access to structured vehicle financing for Nigerians.
In December 2024, the Nigerian Consumer Credit Corporation, Credit Corp, launched a 20 billion naira mobility credit fund aimed at enabling Nigerians to access consumer credit for purchasing locally assembled vehicles.
I must say, moving forward.
This initiative is set to benefit 50,000 credit-backed Nigerians in its first phase, providing them with the opportunity to own vehicles. Beneficiaries expressed their joy and satisfaction upon receiving their vehicles.
We are going to use it as a commercial. So we use it to carry passengers. So we earn our daily basis from it. Then we pay back to the company. This is the actual business we have been doing to support ourselves and support our family. Most of us, we use this tricycle business to sponsor ourselves to the higher institution.
In collaboration with key partners, this program aims to enhance access to structured vehicle financing, empowering citizens while promoting local manufacturing.
The vehicle today, you'd be purchasing between 30 to 60 million naira, one car. Whereas one of these kekes is, one of these vehicles, these motorbikes, you're starting not small. We are starting to cover a larger number of people, and then we begin to go up the chain to cover people with larger ticket items, meaning things that cost more money for one.
And as I'm talking to you, Bank of Industry has promised to support one of the company that manufacture the tire for tricycle and motorcycle here in Nigeria, because they know the credit scheme is already supporting that credit card and provides credit scheme to support the final product. So there are some interwoven, and that's why I say multiplier effect, because immediately one kick off, other will follow.
Among the critical partners is TVS, the largest assembler of tricycles in Nigeria. The management confirms their capacity to meet the demand generated by this project.
There is ample capacity within our industry and in our factory, which you have seen, you're right here, to produce much more. In fact, We were doing maybe 3 times the amount we are doing today. But then because of the situation, it has gone down. However, I'm very confident that with this new intervention of the government, this is going to be a game changer.
Action takes the risk algorithm, profile every of the customers through our technology, and then we're able to identify that this customer, through psychometric testing, through financial analysis, be able to say this customer is going to be able to meet our requirement for the loan and the credit card requirement for the loan.
As the consumer credit scheme unfolds, it only promises to change the lives of individuals, but also contributes to the growth of the local economy. The initiative also represents a significant step towards financial inclusion and economic empowerment for many Nigerians.
And yes, just before we head back to Sunrise Daily Studio, the NGX is on fire these days. Hit a new high and then went up. Hit a new high at 107,000, went to 108,000, and even made 109,000. So yesterday it closed at 109,172.04. I hope profit taking will not dampen our Valentine today, but we'll give you intraday numbers at 1 p.m. During Business Incorporated. Do join me to be you and I. It's Friday, yes, so we always do it together. We'll do 55 minutes of business at 1 p.m. during Business Incorporated. For now, I hand you back to the ladies, Malpe and Kayla.